A quick recap of the statement of financial position. I want to quickly highlight the formatting issues that will give you presentation marks, right? First of all, you are going to need the name of the company. You will then need to identify that it is the statement of financial position. Remember, it is a wealth concept, so it is the statement of financial position at the date. That's the year end, not for the year ended, right? Very different to the statement of profit and loss. Then we must split up into assets versus equity and liabilities. Remember our accounting equation? Assets equals owner's equity plus liabilities. Well, that's exactly what we've done. We've got assets equals equity plus liabilities. Okay, so obviously here when I do total assets versus total equity and liabilities, those two must equal each other. If they don't, you've got a problem, right? In an exam situation, let's be realistic, you're going to run out of time or you're going to make an error, right? I'm not expecting 100%. It might be an adding error, okay? But this figure, whatever you add up as total assets, you will just go down and put the same figure in. Don't pull out your calculator, you don't have time. Just go and put the same figure down at the bottom. Okay, then let's now work through what the the recognition requirements and disclosure requirements on the face of the statement of financial position are. Assets you'll split between non-current and current, and then you must have at least property, plant, and equipment. If it's included in the question, you'll have investment property, any intangible assets. Those two, not really likely to come up, okay? But PPE will definitely be there in this course. Financial assets, you may have deferred tax assets. Do a little question mark for that. I'm not expecting you to understand what a deferred tax asset is. If they give you a figure, deferred tax assets, put it in under non-current. Then current assets, inventories definitely covered in this. Trade and other receivables are actually part of financial assets. Other current assets, financial assets, and then your current tax assets are the amount that you actually owe to SARS, to the receiver. And then cash and cash equivalents. Those will always be there, your bank accounts. Then if I look down, let's change our color highlighter to a green one. I then have total equity made up of share capital, other components, retained earnings. Okay, and for you, that's where the total will end. What you will find is later on in future courses, in courses such as FAC2601, we will deal with non-controlling interests. That is more for 2602, so don't even worry about that now, right? Let's remove that out. Okay, so I'll get my total equity. Just remember that other components of equity, retained earnings, your reserves, I need to split between non-distributable reserves versus distributable reserves in the notes. Then total liabilities will be made up of non-current and current. You will have long-term borrowings, or sometimes we call this interest-bearing borrowings. If there's a deferred tax liability, again, not a definite that will be there. Other financial liabilities, provisions. Provisions are liabilities, but where there's some uncertainty about the timing or amount of the future outflow. Current liabilities, trade and other payables, short-term borrowings, and then the current portion of the long-term borrowings you disclose separately, right? The long-term borrowings versus current long-term borrowings. Well, current means it's going to be repaid within the next 12 months. Then your current tax payable and short-term provisions. What I need you to understand is that all of this is going to be referenced to notes. So you're going to have a column called notes and your reference, PPE, to note number 3. Financial assets to note what number, whatever. Inventories will have a note. Trade and other receivables, financial assets will have a note. Cash and cash equivalents will have a note. Equity will have a note. So I'm just putting X's. You must put in the number that the note is going to reference to. We'll do that just now. Then long-term borrowings will have a note. Provisions will have a note, etc., etc. You will list all the items that I will tell you to disclose in the notes. Last thing I want to just quickly recap is this equity must match to the statements of changes in equity. And we did that in the previous series. We did the statements of changes in equity. Take note, for the year ended, not at the reporting date. And we did share capital, retained earnings, each of the reserves, and NCI I said don't worry about. And at the end, you're going to have these balances, right? And those will go to the statements of financial position. These other reserves will go to, well, both the mark-to-market and the reval surplus or non-distributable reserves in the statements of financial position. They must match. Okay? They must be equal, the same figures. If they're not, because you've done something silly, you may lose a presentation mark. Okay, so that's an overview. Next up, we're going to go through each of the individual notes that will be covered in a lot more detail in this course, FAC2601. Learn these formats, learn what I'm telling you in the notes. We're not covering the theory for the notes, just the formats in the study unit. Thank you.